Hi everyone and welcome to Inderes TV. Today we're going to talk about Neste with Analyst Petri Gostowski. Hi.
Hi there.
So the Q3 results were they significantly exceeded the expectations. What does this mean, that Neste's Via Dolorosa is finally over, or is it just a tiny light in the end of the tunnel?
Yeah, there's definitely light in the end of the tunnel. I mean, the market situation has improved somewhat in the renewables, but on Q3 the expectations were exceeded in the oil products segment, and they are actually the product margins were very nice in the oil products, and then it's a very important part of Neste's business currently, and especially the cash flow that it's bringing in currently, because we know that Neste has a huge investment project going on.
Yeah, so they need the cash.
Yeah, they need the cash flows. I mean, yeah, the market situation has gone towards the better, but I think there are some issues that are still existing in the market. So I think it's yeah, we can be slightly relieved, but
still a long way to go.
Yeah, I guess that's the way to put it.
Yeah, but if we break down the two parts, the renewables and oil products. So renewables, tell us about the market situation there.
Well, it all comes down to the overcapacity there is in the market. So if we look at the longer term, I mean, we had a very lucrative market that grew significantly in the past years, and therefore companies like Neste had huge margins. And then this led to the fact that others were willing to come into the market and reap their part of the profits. And we had a lot of investments coming to the markets, and it was actually too many investments. So there was more supply than demand. Obviously, there were other impacts or other facts impacting the demand. For example, Sweden had a decision of cutting the blending rates and so on. So we obviously know that the demand doesn't go linearly upwards, even though it is growing. And then we just had a tough market balance in terms of supply and demand. Now that the markets or the margins significantly dropped during last year, we had some capacity shutdowns and some investments that were prolonged, and this kind of led to the fact that the margins started to improve because it was more and more going towards a better balance.
Okay.
So there is fluctuations. Overall, we still know that there is the overcapacity, but then we've had for example, Trump's tariffs that are impacting the ability of companies to bring volumes from the US, where the majority of the overcapacity is, to the European markets. So European markets have kind of been benefiting, and they have been like the overcapacity hasn't been able to come here, and therefore the positive outlook, the demand growth in the renewable diesel market has led to a much more better margin level. Now it's interesting to see where the margins balance, because they're not stable, they're going up and down. So we'll have to see where it stabilizes, and this will obviously have a big impact on the renewable segment's earnings going forward.
Yeah, that's really interesting to watch. But in Q3 there was a growth on 5%, and we expected about 10%. So what happened there?
The big picture is that Neste is able to reap higher volumes from their facilities, and especially that after the Singapore new line is up and running. They had a tough ramp up last year, but now it's up and running. Then you have to always remember that there's these kind of mandatory preparations on the second half of the year where they have to stall their production and do maintenance work, and this impacts the quarter-on-quarter volumes to some extent. To some extent, and then it's not a big miss in this case, that we know that they have to have some inventories to be able to send volumes to customers during Q4 when there's a lot of maintenance work.
Okay, so if we look more about oil products, then there was the clear earnings beat at group level was driven by the oil products. So what's the situation there, and what does the market look like at the moment?
if we look at the big picture, the demand has somewhat decreased due to the overall situation in the economy.
Yeah.
But I think the biggest driver of the margins in oil products is the fact that everyone knows that the demand for fossil fuels will decrease going forward. So there hasn't obviously been any new refining capacity for a long time, and the companies are hesitant to bring more capacity because it's a decreasing market.
Yeah.
And then we have these common maintenance works during the autumn. So this has led to a situation where actually the refining capacity is tight. So there is good enough demand to keep the market, the demand and supply situation tight, and then Neste is obviously able to produce volumes well at Porvoo refinery, and they were able to benefit from this high margin environment. And obviously another fact is that the oil price has been low due to the overall global economic situation.
Yeah.
So I mean
so benefiting from a lot of factors.
Yeah, the stars were aligned for oil products on Q3, and I think that's I think this is kind of a structural thing we might be seeing in the oil products market, that as the demand hasn't really fallen that fast as has been anticipated based on the investments on the refining capacity. It is a tight market, and therefore the producers are able to reap good margins, and then obviously Neste being one very efficient producer, they are able to maximize the potential in the market.
So do you see this going forward as well?
I'm hesitant to make any definite calls because we know the volatility there. But I do see that going forward, the market might be structurally more tight than it has been historically, and therefore I could see the potential for Neste to reap higher margins there than they have in the past years.
Okay, yeah, that's interesting. So what about renewables going forward?
Well, now we've seen the European spot margins improve a lot. There's obviously many facts. One big factor is, however, that the market is growing in Europe. So the demand is growing, and this will kind of eat out the overcapacity at some point.
Yeah.
The question is how far away that is.
Yeah.
We don't obviously know because there's a lot of legislation behind. I mean, European countries are working on the RED III directive and its implications and this will obviously impact the demand. And then we have the tariffs that are protecting the European markets from the oversupply. But then, as we know, it's a global market, and from other markets, we've seen from historical events that if there's an oversupply somewhere around the globe, it tends to find its way to different markets.
Yeah.
It's very hard to protect or like isolate one entire market.
Yeah.
And obviously, I mean, if the margins get high enough, you can always bring it over the tariffs and pay the tariffs depending on what it is. So I wouldn't say we're out of the woods yet because there is clear overcapacity, and we've seen actually in the recent weeks that the margins have started, or the spot prices of the renewable diesel have come down to some extent. So we can look at the long-term supply and demand balance, and then we have to look at it on a shorter basis.
Yeah.
And it is always impacted also by, for example, Neste's maintenance work, because that cuts off some volumes from the market, and therefore it's more tighter the market. And now then after the second half of this year, they will be able to bring more volumes, and that will again balance more the market.
Yeah.
But I think the main point is that the market seems to have bottomed out. I mean, we're not going back to the sales margin of starting with a $300 figure that we had early this year or late last year. So I think the worst should be behind us, but we'll see where we land, for example, going forward next year. And it's very important for Neste because, like we discussed, they have this huge investment project, and every dollar, every euro they can earn on cash flows is very much needed because the project is eating a lot of cash, and the company's to some extent levered currently.
Yeah, that was actually my final question here about Neste. The Rotterdam expansion.
Yeah.
It's eating a lot of cash every day, and the cash flow situation isn't what it should be. So, and when will what's the timetable for this one?
So the expansion should be finalized during 27, and then from there on, they will start ramping up the new facility.
Okay.
And then obviously that will bring new volumes to the market, and it will have its impact on the supply and demand balance. So there's many things to consider on this matter.
Yeah.
But as it looks currently, given where the margins are, Neste should be able to reap enough cash flows to pay for this investment and have their balance sheet on a satisfactory level. And then obviously going on from there, it's important to bring down the leverage. And like we've spoken before, the company has solid liquidity, so I wouldn't be too worried about the financial situation. But it's very important that the renewables margins have come up to a more healthy level.
Yeah, sounds good. So what about valuation and recommendation? How do you evaluate this kind of thing?
Like it's probably obvious at this point, there are very many factors to evaluate. On the short-term basis, the valuation is obviously high because the earnings are on a rather low level.
Yeah.
And then the risk profile is rather elevated due to the fact that there is a huge investment, that more cash flows are going out than in. But then it all comes down to on what level does the renewables margin kind of land, say, the longer term. Current expectations are, I think, on a decent level, so that the margins will be healthy. I would expect that the market would, fix itself in a way that the supply and demand would be in somewhat of a balance in the long term.
Yeah.
So this current margin expectations, or where we've seen it at the latest Neste Q report, it was just below $500. So I would expect that to be rather close to a healthy margin level.
Yeah.
But then, as said, we have to follow what happens on the demand side. If it grows and it eats out the overcapacity, we might be in an environment where the margins are higher, and then on the contrary, that would bring more investments again or more supply. The thing is, I think for the time being, the margins will be much more volatile than they will be in the history, and that kind of therefore the risks are elevated, and you would want to see more higher return expectation in order to carry these risks.
Yeah.
And currently, I see that the market is pricing an unhealthy margin, a healthy market environment, and I kind of don't see any upside there to be in order for a positive recommendation. So to put it short, we see that the risks and return profile is kind of stable, and we have a reduced recommendation.
Petri, thank you so much for all these comments. And if you want to know more about Neste, go to inderes.se. And if you have more questions to Petri about Neste, you can join our forum and ask there.
Definitely.
Yeah, welcome.